Okay, this is just a brief review for Wednesday, the 10th of September. Had some pretty epic price action today. As far as my trading went, I'm up in 2 accounts and then max daily loss in another account in the top step. So definitely got a bit carried away with the top step accounts. The other two are looking healthy. I took a whole bunch of good trades, but also completely overtraded in the top step accounts, and yeah, definitely could have avoided that. But I just want to focus on the price action that I'm seeing at the moment, because there's a lot of cool stuff that happened and a lot of ways I could have traded it better. So to start with, on gold, so at all-time highs, and we had the previous day created this nice long wick on the hourly chart, taken it out right at the open at 1800, made a failure swing and then a rapid push higher. So when I see this, I can see that, one, the fact that we had this really long wick, we know there's a lot of sell side down there, then running that out and rejecting higher. I expected this to act as an order block. We were sitting at that area around during the London session, which is this area right here. And above us, we had this buy side pull. So if I mark out this buy side, which is also at the 50s. And above that, the daily wick midpoint, which I expected to act as a premium array to send us lower. And part of the reason why I expected us to go lower is this was just the narrative in this range, with engineering this high, consolidating below it for such a long time, then eventually rating it out right at 10 a.m. news, and aggressively dropping lower. I expected us to potentially reaccumulate shorts up in this area to head lower. Also, we're above midnight price. That's midnight right there. So I expected us to run higher, take out buy side, head lower. That played out really nicely. So I want to focus on this area right here, this consolidation. And that is where I got a bit chopped up. The reason why I was quite confident in it setting us higher is because of the narrative I just outlined. Also, midnight was ripping straight to a premium, and during the London session I expect us to continue to even a deeper premium before eventually returning down to that fair value of the midnight price. On top of that, I could see the opening prices from 1 a.m. and 2 a.m. were at the exact same level. That to me indicated that this was a consolidation, and so I was expecting that we would go from consolidation to expansion in the direction of the trend, which at this point was upwards. That ended up only happening at 5:30 a.m. So I was actually buying already at 3:10 a.m. And then, as you can see, it's continued to consolidate and took me out before the actual move. But if we zoom in a bit on the 1 minute chart, we can see some quite nice structure. So I've seen a very similar pattern to this before, where we have a consolidation that we're expecting expansion from, and then we have external range right here. So you'd classify that as ERL, and that's because that's right at the low. We hit ERL. We then engineer a low at deep discount of this range from the high to the low. So we now have a deep discount internal range liquidity. So we entice longs and then drop straight back down, take out that internal range liquidity. So now we've hit external, we've then hit internal, and now you can just use this order block. And as you can see, that held beautifully. But I ended up buying up all the way up here because I figured that, okay, well, if this is a consolidation, we've already hit the internal range and then expanded higher. We've come back down into the order block and then expanded off of that. So I expected us to maybe pull back into here and expand from there. So this is consolidation, a reaccumulation, expansion, return into the fair value gap to expand higher. However, it kept on recapitalizing on that same order block throughout this range. Interesting that it didn't take that out in the end, and maybe that's a model I could actually look to develop further, where we have ERL hits, then deep discount internal range, enticement, take out that internal range, and then use that order block and trust that that will hold throughout the range. So that's a potential way I could trade this in future. But I really liked all these really aggressive, enticing rallies, especially this one right here, and the way that we kept on dropping back down below it. So I was quite confident that we were accumulating. I ended up taking one final trade, or two actually, one here, and then got stopped out. Then I took one again right there, using this impulse rejection failure, and closed out the trade, most of it right there, and then got stopped out on the runner. And then eventually, it's around 5:30 a.m. it finally does expand into my target. But yeah, that's a potential model that I can use in the future. Then jumping across to the news, so 8:30 news, red folder, we were holding that daily wick CE really nicely. And at the same time, you can see 6 a.m. and 7 a.m. also perfectly equal opening prices, representing a original consolidation. Now, when we have original consolidations in the form of these opening prices, price does not have to take out the actual high. As long as it hits the opening prices, then that, to me, is good enough for the consolidation to have been accumulated at. But it's really nice to see how clean it was respecting it on the 15-minute time frame, with the bodies perfectly respecting that level. Very algorithmic, big word. We then had this long wick ahead of the news, and then overlapped it quite aggressively. But at the news, we ran up, swept out that impulse high really aggressively, and then rejects low. And also I was looking at this swing high as well, and if you look at the 5-minute time frame on the right, or if I bring it up, this swing high stands out a lot, because ahead of the news, the most recent thing that had happened, one, we had enticed longs of this big rally, and so there's sell side below all these smooth lows. But then most recently we had sold off from this high, and then engineered this long wick and consolidated ahead of the news. So anyone chasing this short, this is where the trailed stops go. So when we rated out that high and then closed straight back below that key high, I knew that would be a very key place to accumulate a position. The very next candle, after 8:30, so 8:35, we run up just a bit above it and then begin breaking low. So that would have been a very nice entry just on that wick, anticipating that's because we had taken out this impulse high, that this high should remain intact and we should head lower. Also the fact that we're respecting that daily level. I'll bring up the 1 minute chart now as well. Then I'll finish up on gold. So as I mentioned, very confident that we would hit the sell side down here, and then also that I really liked where we were, and so yeah, I would have wanted to get in just here. I was actually hoping that we'd come and sweep this high up here, but to be fair, we had already taken out the 831 high with the 832 candle. So, and with the heaviness of price and the narrative we had with the news enticing us high, it made sense for us to sell off from there. As we pulled back in, I did expect this kind of area to hold as a breaker block / mitigation block kind of thing. I shorted right on this candle right there, but then I quickly took profits as we were spending a lot of time down here and expected we'd likely come up for one more raid. So I put a limit sell at that same old high and also above that short-term high, but we fell short of it. But that was on the Forex account, which I just had a really wide stop on because it was the account that has zero leverage essentially. So I had just one tiny lot and just let it sit throughout the whole day, and eventually hit my target. But yeah, that's the gold, and expecting we could head up from here, but it's more likely I'd expect us to head a bit deeper into the range. But yeah, now across to Nasdaq, and then be done for the day. So on Nasdaq, there was some really nice narrative. I'll try and show you everything I was seeing. So to start with, bring up the 15 minutes on both of the charts. So this was the price action from the week. This is the Friday high. Then on Monday, we made relative equal highs of that. Then on Tuesday, once again, making relative equal highs with both of those, so 3 times daily highs. And then right at the open yesterday at 9:30, we sold off, took out all the sell side. We had a delirium model down here. We have relative equal lows, these two lows, and then a very obvious impulse low just below that. So we accumulated below that and then climbed back up into the close. So that is the RTH close. Overnight, it runs above these daily relative equal highs, runs up, falls just short of the buy side, and then PPI eventually blasts up, falls short of the all-time highs, but we do get above that 24k level, and that's very key because with those institutional levels, when we do hit them, we like to reach 100 and 200 points past it. And since we've just broken out above it for the first time in a long time, it makes sense for us to trip in any breakout longs above 24k, then pull back a good 200 points, and that was my expectation. And would you look at that as well? That line that I put on my chart this morning was hit perfectly to the tick. I can show why I marked that out as well. But first of all, looking at the RTH chart, that's where we opened at 9:30. But the reason why I was very interested in this is one, we had the gap up, so I was looking for a short, but then also those relative equal highs on the daily chart, that becomes a key liquidity level. Anyone looking at this chart sees this as a breakout opportunity above these highs. So when we open up here, we can assume with a lot of high probability that we've got breakout longs. Everyone tripped in long above 24k, above the old previous day high. And then, so that's the RTH narrative, is that breakout longs, essentially. And then on the ETH, you can see we just had PPI, had a big rally, hit the open. We've been climbing overnight, and most recently hit the open, which is right here, we had been rallying. So if the ETH narrative is that everyone's getting long, RTH, everyone's on breakout longs. Then if I drop down to the 5 minutes, we'll be able to see those hourly opening prices, which is what this original consolidation is. If I have the indicator on correctly. I have to rewind price to see it. Just do that. But you can see, still not. Because we had all the sell side down here, I thought, okay, well, if we are going to trip in longs above the highs and then sell off, how deep could we go back into the range? Because obviously we've got the old previous day high here, that's at the 900, so that was very high probability as well, because breakout above 24k, pull back 100 points, that leads us to this liquidity level. If we go back 200 points, that brings us all the way down to the 800s, which is right there. And at that exact same price, we have this original consolidation. And that is seen by the fact that we have these multiple hourly opening prices, 11 a.m. and 12, right at the same level. So that's why I had that level drawn out, and that's really cool to see that get hit perfectly. So literally went like one tick below and reversed back up. This area in here, so I caught this short, I then caught a few shorts in this zone here, but then as we pulled up, I was still trying to short throughout this range, and we just went sideways for a long time, and that's what chewed up the top step accounts today. But going to the 1 minute chart, and then I'll finish this up. This PPI ripping high, We then create this high there, drop back down a bit, consolidate. At this point, we're building up buy side on the highs and then sell side on the lows, especially below this low. Now, after going sideways for a whole bunch, we drop aggressively towards this low, but we do not take it out, and then start climbing higher into the open. Looks like there's a candle missing here. There's a few candles actually, but there should be 2 1-minute candles right here that TradingView isn't showing, but they essentially just look like a green candle up like that, and then the red goes straight down again. But yeah, so I knew that we had sell side below this lows. We had been enticing longs, and then right before the open, leaving a lot of smooth lows, running up into the highs. Put SMT on the highs just ahead of the open, and then this is 928. At 928, the market on open orders closed, and you're no longer able to change them. So if people have put in an order to buy on market open at 9:28 a.m., they can no longer remove those orders ahead of the open. And so that's exactly the moment we see it turn from a green candle into a red candle, starts heading lower. And when I saw that happen, and in fact we had all these lows down here, the price action, wish we could see the 1-minute charts, but it just shows that we were likely to head lower. We're taking out this buy side, and we had the SMT on the highs, and so I jumped in short, caught this leg lower. Unfortunately, I took partials quite fast. I can actually, I took partial, like the first partial all the way up here. And then eventually I took a few more down in this range. So I still got a good run, but it'd be good if I was able to have a certain price level that I reach for every time. For example, 830 would have been a great place to target. And so rather than when I get in a trade, I'm just trying to get as many points as possible. Rather than that, I'm thinking, okay, well, first target is the 830 price because I trust there's a very high probability of us reaching there. So that would have been a great target to have. Since we had sold off like this, I was extremely bearish, and as we started pulling back into the range, I recognized that we had this nice drop lower, and I expected this to remain partially unfilled. If we were going to head lower, we should not fill in the entirety of this gap. And also, there was a high probability of us making a new low than us filling in this gap. So I trusted shorting on this new 5-minute candle at 9:35 a.m. as we rejected that high with a stop loss just up here. And then that worked our way lower quite nicely. And that's the old previous day high at the 800s. We then consolidate a bunch, but then have this nice 5-minute swing high. Run above it, I took a short as we hit that high, and then it dropped down and hit the lows. So we could probably, not paper, log into a account. Actually, it's already logged in maybe. It is, yeah. So MNQ. Only took the one trade on the my Fund Futures account as I've been planning to, so that worked out really well. So I'm trying to only take the trades I should be, if that loads. There we go. So getting short right up there. As we worked above this high and then began showing this wick, jumped in short with the stop sitting up there. As far as partials go, took the first one a little bit early. It was just as we hit these short-term lows, expecting a bit of a bounce. Also, I saw that we had the 50s right there as well. So we did get a slight bounce from there, but then we, of course, headed lower. That one was a perfectly good fill because that was based off of a deep discount of this range. I always want to take a partial there. And then the final one, I was going to hold it as a runner. If we had been really heavy and sold off, this wouldn't have got stopped out, but we just started stalling and then pulled back up, stopped me out. and eventually that worked its way back up. So it wasn't actually all that heavy, but only took that one trade, so closed that up quite nicely. Back green on the week on this account. And then there's one other account. I'm trading these on Tradeovate's execution platform as well, which isn't the nicest. It does work, but it's not the nicest. So right here, I was still looking for those shorts. So I rated as we hit this high, I sold right above that. A really nice fell on that, right at the highs. Took one partial here, took one partial around here somewhere, and the final partial was actually right at the low. It merges them together on TradingView, but yeah, took them out of different places. We then had this 1 minute fair value gap. As I was still bearish, I was looking for a continuation lower. We traded above it initially, and then when we broke back down below it, that's where, as we came back up into it, I figured I could short that because I saw that we had just taken out this high right there and rejected low. So I tried shorting, took multiple attempts, only lost a few points in each attempt, so very minimal losses, but still it wasn't all that clean, and the reason why is because we have these impulse lows that we clearly rated and rejected higher from, so it could have definitely avoided taking those trades, especially after this nice puke low. With such an aggressive move like that, you wouldn't want to see such a deep pullback for one, and if you do, you wouldn't want to be shorting right here. You'd want it to really show that it was pushing lower and then get in more in this area. So it was just showing a lot of strength after this enticing move lower. Then runs higher into the range. I see this short-term high up here. I get short as we hit that with a stop above this high, and then I misgates that just before it hits my stop, also for just a few points lost. So the first trade I was up 217 on just that execution. Then I took 3 more executions after that and lost 67 across all 3 of them, and that is with particularly small losses. If I'd taken a full stop on each of them, it would have been a lot more lost. So good thing I was managing it closely and mitigating. But yeah, could have also just taken that one trade and been done for the day. Would have been also perfectly fine. And then you can see all that mess through there, which is what chopped me up. And yeah, then I'll mention we got that lunch narrative. I think this played out earlier this week as well, where we have AM session just makes a low and then consolidates, trapping everyone long, and then eventually when everyone's having their lunch or whatever at 12, that's when the move actually begins and begins selling off aggressively. So I saw that breakdown. I thought that might be what it is, and it is. So I want to develop this model further where we have an AM session that has that kind of price action, then trusting that 12 should just continue to melt lower. Yeah, and then just to complete it, this is my beautiful account there. These are the executions I had on gold. I'm trying to buy and go long, but not quite getting it. And then this is the work on NASDAQ, and this is what's resulted in that beautiful realized P&L balance right there. The initial short was perfectly fine. That was a perfectly fine short as well. And then as you can see, from this point onwards, I'm just not making the best decisions, taking shorts right at the lows, closing it immediately. Then that was that short that I took on the Apex account, which was perfectly fine. This short up here, which I also took on the Apex, that was partly based off of the same idea, same premise that this gap would remain unfilled. But in this instance, it was fine because we had the narrative was still in play that we're hitting lower. We're more likely to take up this low than head into the gap. But at this point, we've just been consolidating below this high for a long time, and we're aggressively pulling up towards this high. So it was really just lazy analysis to figure, oh, just short here and put a stop above, assuming this gap will stay unfilled. So I could have avoided that. So you can see, flipping long, then short, which is not ideal at all. This was a bad trade because it was a relative equal highs, aggressive drop lower, which is very enticing. So basically just enticing shorts, and then a short right at the low of that, without waiting for any sort of confirmation. So I was the fish in this instance. Then runs higher, for some reason got long, drops below this fair value gap. When we drop below this fair value gap, I figured cool, that should remain unfilled, so shorters. And then I should have had my stop loss closer because that should have remained unfilled. It then comes up, stops me out. Another short, another long, another short. Definitely a bit tilted. I didn't feel emotionally like terrible, but definitely was not taking good trades, and you can see that from a mile off. And even this, I figured, okay, we're above midnight, we're coming into the news, have all these smooth lows, so I just took a gamble and took a random short right at PPI, which was a silly move, especially since we had just made this such an obvious high and started moving lower ahead of the news. It's obvious that anyone, who is bearish, they go and think, oh, cool, this is a great place to short. But yeah, so that's not ideal price action and not ideal trading. But the price action today was pretty cool. And other than this, that wasn't that much fun. But when I do recognize this, I should be focusing on 12 and the lunch hour for that short to take out those lows, because that played out really nicely as well, and I could have easily done that. So that'll do for this review. As far as those accounts go, the MFFU account, I'm going to continue making sure that I'm trading that only once a day, only doing the RTH trade stops model framework, and just being consistent in that. The Apex account, I'm done with that for the week. I'm up quite nicely for the week in this account, so no need to keep on trading it. And then on the Top Step, I need to go on to gold and not trade gold until I've actually got a very specific model and framework I'm using, kind of like the RTH trade stop model that I'm using with the MyFund Futures account. With this account, I should also be using a very specific framework for if I'm trading gold, because at the moment I'm just looking at price and going, oh, I think it could go higher. This kind of looks like an original consolidation. We should go into expansion after this. We'll probably hold around here, and as you can see, it doesn't result in very good results. So I should also only be taking one trade in all my accounts, because it seems to be the most effective way to do it. So yeah, less trades and more specific trades in this account. MyFund Futures, continue doing what I'm doing, that's great. And Apex account, done for the week. And yeah, that is good enough.